So once you see my screen and you hear my voice, please, I would like you to confirm both that you hear my voice, but also see my screen. Okay, I believe it should be fine at this moment in time. Please let me know if that's the case.
Okay, everyone, this is Jose.
Wonderful. Perfect. Thank you, everybody. Thank you for your patience. Let's begin. So welcome to the session today. Uh, I will be your guide today, as many Tuesdays, where we get together for short-term trading purposes. Okay, so today it's all about intraday trading. We'll be looking at the futures markets. We have new symbols. Last week we had rovers, isn't it? So we're going to be looking at the futures markets. We're going to be looking at some currencies as well, and planning and executing as many trades as possible, depending on what the market offers us. Okay. So before we start, a disclaimer: the following videos, clips, demonstrations are for educational and instructional purposes only. Predictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Okay. Good. So we got the disclaimer out of the way. So what I'm going to do now is to close the intro slide. And here is our stress session ready to be utilized. So we're going to start planning on those trades. Okay. Just in case you didn't know, if you haven't been around for a while, I said it a minute ago. I want to say one more time, just in case. I happen to be in a trip far away from my normal internet connection. I am where internet connections are different than anywhere else in the world. There will be any interruption, please just bear with me. In any case, I am also recording this session in a different format, so if anything was to happen, worst case, you would find the recording on YouTube. But obviously the idea is that everything's going to be smooth and is looking okay for us to have a 1-hour session, and identify trades in the market and be able to work together on their execution. Okay, so just know that, just in case. Okay, risk management, if you wish. So anyway, let's begin. I have my trade station ready. Okay, notice how with trade station I have changed the symbol to ESU19. In the last session I was still using the M, but now we have moved into the U symbol, since last week we had rollover for most futures markets that expire every 3 months, such as S&P, NASDAQ, currencies, etc. Okay, so I'm sure you guys have already updated your symbols. Okay, but I also know that some of you only trade on Tuesdays with us. Okay, so for you guys especially, make sure you have the U symbol both for the S&P, also for the NASDAQ. Okay, NQU19. So make sure you are using the U. We are done with the M. Okay, we had roll. So anyway, so what do we have? Okay, we have the NASDAQ in front of us. Okay, and again, we're gonna go ahead and apply our methodology, where step 1 will have us ignore the current candle on the chart, will have us look at the prior candle on the chart, look at where the close is relative to the moving average in the 15-minute time frame, and we can clearly see the close is above. So we are in an uptrending market where the DMI below is showing us the green color, which is not a contradiction. Okay, so close above and green, it's not a contradiction. In other words, we have a market environment which is strong. This suggests planning on long trades, and the trades we would want the trades to be taken around the average price, which is 7746. Of course, if the price of the NASDAQ drops a little bit, now it's 53. So if it drops to 46, okay, so probably the average will bend a little bit as well, as you know, and 46 may become 45 or something of that sort. So when looking at 46, 47, you can see we got nothing on the 2-minute time frame. We got nothing as well on the share bar. Okay, and we do have a green UFO where the 45 is more or less in between. Okay, so we certainly have a trade here that could be executed using this UFO. So since we do have a trade to be executed with a UFO, we are going to go ahead and plan it. So we are ready to execute, okay? 6 minutes from now as well, we'll need to be aware, because 6 minutes from now, we'll have a new close, okay, in the 15-minute time frame, and therefore the moving average will update, probably ticking higher. And if the average ticks higher, then the UFOs on the left may come to play. At this moment in time, they don't. And if they were to come into play, to be honest, the upper part of this UFO is 48, 49, where the upper part of this UFO is 48, 49. So we're going to have a very similar trade, either if we execute in this particular 15-minute candle or the next one. So not many changes will be to be expected. But in any case, we need to observe everything that we have around to anticipate anything that could happen. Okay, so step one, we identified the fact that the market is in a strong condition, so long is the right choice. Step two, we will now look at our target, okay, using the common time frame, but not the 15. We will move quickly to the 60-minute time frame to find where the target should be. Okay, and we have a little bit of pending data here on the upper left. This is given the fact that we have a new symbol, the U. So TradeStation may need to catch up on downloading the new data for that symbol. So we'll just wait, and the moment we have the new data on the screen, we will then be ready to set that target. Okay, so using the 60-minute time frame again, because the market environment is strong. If the market environment was weak, then we would use the 15-minute time frame, which would normally produce closer targets. Okay, so what do we have here? Well, it seems that the next UFO is actually quite far away. Okay, so the next UFO is located at 78.26. Okay, 78.26.25. This is a very, very, very location for our final target, which I'm not gonna happy about it. Okay, obviously not. At the same time, careful there, because we may surpass 5 p.m. Eastern time, and therefore we may run into a different margin required for this trade. Because that when holding futures trades after hours, the margin applied, especially for markets such as the S&P and the NASDAQ, which normally is 25% of the normal margin. So then you would go for full margin requirements. Okay, so careful with that. In other words, you may have a rule where if you haven't reached 78.26 before the close of the market, you may want to close the trade manually, unless you are open to accept a greater margin requirement. Okay, anyway, so target 78.26.25. So we got step 1 and 2. So step 3 now would be to identify the entry, which we have already, which is going to be this UFO right here. Okay, which this UFO right here, the upper part of it, is located at 49.25. Okay, so 77.49.25. This is the location of this UFO. This is 3 points above the moving average. Okay, but it's okay, because the bottom part of the UFO happens to be 39.75, which is clearly below the average. Okay, so we're gonna go with it. Okay, and because it's the NASDAQ, you probably heard me say that before, with the NASDAQ, it's a little uncomfortable to place orders using the matrix, because you have to do a lot of scrolling and a lot of dragging. So I'm just gonna place the order using the old school method, order bar, with 2 limits and 1 stop. We are planning on a long with 2 limits and 1 stop. Notice how I am using 2 contracts, and I will scale out half of the position at target 1, half of the position. Target is, as the name suggests, the final one. And of course, in your cases, everybody, please go ahead and calculate the proper size for your trades. In my case, as a guide, if you wish, I will be using 2 contracts. Okay, so 70.49.25, that is our entry. Okay, we will have the final target located at, as we said, 78.26.25. That will be the final target. Okay, before we look at the safety target, right below 75, so we'll make it 39.50. 50, okay, and 39.5. Okay, so 77.39.5. Let me double check I didn't make any mistake. And 39.5. Very good. I got it. And then the last thing that we have pending to create is our safety mathematical entry, which is 77.49.25. We're going to look at where the stop is, which is 77.39.5. So we are talking about 9.75 points. We will project this value above the entry of 77.49.25, and this will bring that safety target to be 77.59. Okay, so 77.59. Okay, 77.59 would be the location for our safety target. It's all clear. It's all good. Hopefully you guys are working with me on this. If any question, just let me know. And I'm just going to click now and validate this order. Okay. And we have the order in the system. Okay. So visually speaking, you can see the entry lining up with this green UFO, which nicely also lines in. We then have our stop equal distance and equal distance to the target. This is our safety target. We calculated a one-to-one up there, 2826.25. Okay, so this is the trade. The order is in, and now, which I would say that are red color. So this should prove this move downside. Okay, and fully to the average. Notice that we had a new close on the 15-minute time trading, and the new value for the average is not I think it was 77.46, now is 77.48. Okay, so great that the average went up a little bit because our entry is 49. So to be honest, the higher the average the better, even though anywhere between 49 and 39 is fine. So the NASDAQ trade is in and is valid. If you have any question about this trade, please go ahead and type it on the chat box. So I will be looking at it and providing you with answers. Okay. In the meantime, move to the S&P. Okay, and again, hopefully we'll get this fill, and the market will drop and hit our entry here at 49. We are 6 points away as we speak, or 5 points away as we speak. It would be very nice, a little bit of a preference I have, which again, this is just a preference. It doesn't mean it's a rule, but love to be executed in trades around the market open, because if I'm right on those trades, normally I tend to get to my targets very quickly, and I love that. And if I get to be stopped out, it also happens very quickly, which I also appreciate, because now it gives me time to plan more trades in no time. Okay, so I personally welcome that, even though sometimes it's not a good feel, because again, we are human, but at the same time, we need to understand the pros and the cons of trading around the market open. Okay, that's a little bit of a hectic time, and hectic could be good or could be bad depending on your trading style, your skill, and also your level of confidence. Okay, so with the S&P, we have, as most of the times, a very similar setup compared to the NASDAQ. The prior candle closed above. The prior candle is also showing us green. So we have close above and we have green below. This is not a contradiction, and because it doesn't contradiction means that you would have red below and green above, or red above and green below, right? So in this case, it's green, and because it's green, you have no contradiction, and therefore we have a strong market condition, as I said, just like the NASDAQ. So since we have a strong market condition, we're going to apply the same method. I'm going to load the 60-minute time frame for the S&P. I am going to maximize this chart and look at what my target would be on the NASDAQ by activating AutoUFOs, okay, and discover where my next red UFO is on the S&P. And the next red UFO on the S&P is located at 54.25. Okay, so we are talking about 20 25. Let me click again. Don't want to make a mistake. 20, 29, 54, 25. Good. And I believe, Bojan, probably this is the UFO you were talking about. Okay. I'm not sure if that's the case. But I would love to confirm with you if that is the UFO that we are talking about. And if that's the case, obviously it's looking like the S&P got a little less room for movement compared to the NASDAQ. So potentially the NASDAQ may be a better trade, but also tend to move in tandem. And therefore, what will likely happen is that it's either both markets will fail and then we'll blame it on the red UFO on the S&P, or both markets will work. And if they both work, it will probably be because those red on-field orders will be canceled and replaced by buy UFOs are up. So we'll be ready to, but most importantly, to follow the rules. And if the rules say the trade, we'll the trade. If the rules say pass, then we'll pass. Okay, discipline, it's key. And I can see your confirmation, Bojan. Thank you so much, my friend, and very nice that you are anticipating 29.49 of the S&P. I have a little problem, which is that the bottom part of the UFO is 49. This one as well is 49. Don't have a confluence with the S&P and the moving average. I do have it on the NASDAQ, okay? And it seems that we are now trading at 53. So now we are 4 points away from the entry. So hopefully we will get filled. Yeah, so the S&P is not a valid candidate for a trade at this moment in time. Marcus, question first. Before Marcus is thinking about any requirements for work to reach to target two, and we in some of the requirement. Okay, no requirement. You could certainly, if you don't have a minimum of 2-to-1, 3-to-1, or whatever you choose, then you don't execute the trade. But at the same time, okay, we also discussed in one of the sharpening sessions that it is a little bit, okay, it is a little bit of a utopia to expect that every trade that you plan, given the fact that you got millions of traders around the world trading against each other, it's a little bit of too naive or too much of a school book or a, what you would read in a book, if you wish, what you will learn in a classical trading class. It's a little bit too much of a utopia to expect that all your trades will give you the profit margin you want. It's not going to happen. And therefore, instead of finding yourself waiting and getting frustrated by keep missing trades, it reinforces much more your psychology and also your account and your confidence level to execute the trades whenever they meet the rules. And sometimes they will make 1-to-1s, sometimes they will make 5-to-1s, sometimes they will make 2-to-1s. And instead of looking at the reward to risk ratio from the point of view of per trade, it would be more realistic to look at the reward to risk ratio from the point of view of as an average after you have executed 100 trades. That would be much more interesting to observe instead of per trade, because again, per trade, there will be many cases where you'll be like, okay, I'm not taking the trade. Okay, so for example, the one with the S&P, if it had met the rules, you would have not taken it because the UFO located at 29.54, probably you would have said it's too close. And then you see it work and you miss it. And then you take the next one and then you get stopped out. And now one loss. You got one loss and one frustration. Okay, so again, one thing is the theory. A different story is to also develop certain level of flexibility and look at your average or statistical results instead of expecting every trade to be perfect, because this is way too much of expectation to the market from coming from the marketplace, where the marketplace doesn't owe us anything. The marketplace is just doing its thing. We're just adapting instead of trying to force the market to be the way you would like it to be, which again ends up deriving in missing trades and frustration. Okay, so totally get it, and nothing wrong with going for 3-to-1s and 5-to-1s and things like that, but certainly ideal, if you wish, when you do it in your let's call it initial stages of learning how to trade. But definitely, as an experienced trader, reward to risk ratio, it's only interesting when you see it as an average, not per trade. Okay. So very good question, Marcos. As always, very, very good question, very thorough, which show that you really think in depth about this. Okay. Juan Carlos, Jose, if I wanted in order to reduce risk, would you choose? So then this would be a case where I would look at the potential for profit. So in this case, if you were to compare the two trades, the S&P and the NASDAQ, the NASDAQ, it's showing us a red UFO further out. This opens up room for a greater move. Okay. So if I had to choose between one, then I would go for the NASDAQ in this case. Another time, tomorrow maybe, or 2 hours later, then the S&P may give you that particular picture with a further away UFO compared to the NASDAQ. So then I would take the S&P. Okay. That's it. Again, this is fishing, my friends. The last thing you want to have is preferences. Sometimes I will hear amateur traders say things such as, "Oh, I love the euro." Oh, I love is a proper opportunity that meets my rules. And if I find a proper opportunity that meets my rules, I don't care which market gave it to me. It's a valid trade. And if you keep executing those valid trades, you make money. So that's the mindset you need to develop. Okay, so I would not overthink too much about it, Juan Carlos. Certainly, you may have a list of preferred markets from the point of view of different markets have different margin requirements, and depending on your account size, you rather trade the NASDAQ or the micro minis or the currency futures instead of gold or crude oil. Maybe that's the case in your case, even though in your case I know it's not the case. But everybody could be different, and I could understand having a specific list of stocks or stocks or futures markets to be traded based on criteria that has to do with, again, margin or volatility. Some markets are more volatile than others, so things like that. But once you created your watch list, and let's say there's going to be 5 futures markets or 15 futures markets or 10 or 2, once you have it, and one of them gives you permission to trade based on your rules, take the trade. That's it. And if you really like to diversify a lot, then take the trades with half of the size, and then you can take more trades with other markets at the same time. Okay, and that's it. Keep it simple, because sometimes you will not have time to look at all of it. Okay, you will not have time to look at all of it. So I'm answering your questions. What I'm waiting 3 more minutes as well to see what's going to happen with the S&P, because in 3 more minutes we're going to have a was significantly higher, then that UFO may line up with the average. Okay, so then we may have an opportunity to plan on a trade. We'll see. In the meantime, we have the order on the NASDAQ trade. Okay, so let me keep your questions. Okay, so the euro contract is also looking good. Sounds good. If that's okay, Bojan, I'll stick to the S&P and the NASDAQ since we are trading right before the market hours for the US markets. But we in the future. It seems that we are 1 point away from being filled. So market is about to open in less. So we are in the trade, and now it's all about play out. So notice how we the average as expected. But again, a good one in the sense that, we have the UFO working for us. We have the average below helping us to potentially add on-field orders in the marketplace. Again, now we have the typical indecision right before the market opens. Okay, this is that critical moment where we may get stopped out very quickly in 1.5 minutes, or we may start moving heavily towards our target. Okay, and we'll see what happens. Okay, we'll see what happens. We still got 1 minute and 10 seconds to see that. Okay, so if you are with me on the trade, please let me know. I can see, Dirk, you are with me. So good job, my friend. Okay, love the teamwork. Okay, so good one. We'll be seeing what happened again. Less than 1 minute now for the market open. Here we go. So let me see other questions that I have while we're waiting. Yeah, gold, natural gas, crude oil, Orlando, I know you love those markets, and I do love them too. But there are a few more implications there that I haven't explained in sharpening yet, and therefore this will come a little later. Okay, a little later. Open in 20 seconds from now, so we are likely going to see an important push in 10 seconds from now, either up or down. And again, sometimes, to be honest, sometimes the market is a little bit of a teaser, and we have those boring opens. But most of the times it's not the case. Most of the times we have a push. Okay. At the open, the market just opened. Okay, market just opened, and it seems that the market is attempting to push to the upside. So let's see if that's the case. We're in an up. We had a precise entry. We have the average lining up correctly for, but at the same time, obviously, at the right at the market, between institutions and between institutions. Okay, so you never know what's going to happen. Okay, so I'm going to zoom in. Apply. Okay, so we're going to be observing, those candles. You can see how price reacted to that red UFO that form. Okay, so on-field orders being filled. That's the classical fight at the beginning of the market. You gotta learn to absorb, if you wish, that price movement on the screen, where for a moment it was really flashing green, powerfully green, and it's very easy when you see it go back into the red territory to have this tendency to kind of be open to give up on the trade. And remember, this is just market movement, orders being filled, orders being replaced, orders being canceled, and again, is the normal process at the market open. So you need to be happy, you need to be in peace with this initial process. And if you're not, this is a methodology you can use anytime. Okay, but it would be better to avoid the market open if that is a little bit too intense for you. Okay, you can, if you were to do this, I'm just gonna go extreme. If you were to apply the same methodology during Asian hours, okay, so typically you would have very relaxed movements and a lot of time to think, which could be also very good. Okay, so it seems that the push is quite intense. Okay, what's a little concerning, if you wish, at the moment, which is also opening a room for new opportunities, is that the market is going below the average. So if we end up putting on the side that maybe stop, so now we are out of the trade. Okay, again, we don't want to rush. We will patiently wait, and in 13 minutes from now, in the case of the S&P, we will be able to see if that new close is taking place above or below the average. And notice how, even though now it's a little shy, we have a little bit of red showing up on the DMI. So if that is the case, okay, if that is the case, that will mean that the market up change of direction in the trend. Okay, it's a new market environment that will lead for us to start planning trades in the opposite direction. Now, we don't know yet. In the end, we may have new institution show up with new on-field orders to buy, new green UFOs will form, and the close will be again above the average. Okay, so we just need to respect whatever is going to happen now, and this is the volatility I was talking about at the market open, which again I personally welcome, because it will lead to more and better trades afterwards. Okay, so now, since we do have some waiting time, we have 12 till the next close. Okay, and out of curiosity, doing something similar, isn't it? Okay, also doing something similar. So what I'm going to do is, instead of waiting 12, something else happen, is I'm just going to turn on the Forex charts. I'm going to bring trading view, and we're going to be planning on some trades with Forex and execute those trades, and then we'll come back to the S&P in around 10 minutes from now. Okay, so bringing trading view. This is not. I want to load a different layout. Uh, 60 minutes. We will begin with the Forex 60 minutes, and then I will also have prepared, just in case, Forex 240 minutes, just in case. Okay. So let's begin with the Forex layout. Okay, and I will not explain the layout because all of this should be known by you. These questions. Okay, so we're gonna majors. Okay, we're gonna look at the majors. So changing my list to cost. Here are my majors, and I will begin with what do we have with the above the average while in DMI. Okay, and green DMI. So what does that mean? That means that we're in a strong market condition. You will want to look for trades around 69, 67. Okay, we have nothing around 67. We have something with 67, but 67 is the end in the range time frame. Okay, so the Australian up good enough to the euro is providing the same thing, even though it's kind of teasing. We have a green DMI below, so everything is good, but unfortunately we have nothing green at the current price level. So the euro for along at this point. What about the pound? Okay, and I see some of you have problems with the sound. Unfortunately, as you know, I cannot do much. When I post the recording, I promise, obviously you guys are attending live, and it's not the nicest experience. Okay, so again, I'll continue with the session since I cannot do much at this point. So with the Great British Pound, PMI is red, so we have a strong market condition to the downside. You can see 127.40, 127.40, and I am very curious to know if we have anything around 127.40, which the answer is no. We don't have anything around 40. Just like here, we have nothing around 40. Okay, so again, patience, my friends, not the Great British Pound. So we move to the Kiwi, the New Zealand dollar. In this one, what we have is a close above the average market environment. Average 3. Unfortunately, at 43, we have nothing. Well, interesting. The market is having us visit many symbols to find a trade. So we'll keep. We have close below the average. The DMI is red, so we have a strong condition to the downside. The moving average is currently 131.74. 131.74. Hey, we have nothing either. Actually, here we do. We actually is 76. Okay, so Frank. Yeah, I get it, guys. I guess I feel for you, my friends. But you know, if the sound happens to be working, I'd rather use it and on the fact that the sound is not good. Just like you didn't type it, guys, even though I truly feel for you guys if that's the case. US dollar, Japanese yen, red. Majors are not giving us an opportunity, so then I'm going to switch to the minors and restart the analysis with the Australian dollar CAD. Oh, actually, we have a trade right now. The Australian below the average. The Australian dollar CAD have red DMI as we speak, where we have an entry at 91.77 and the price is at 91.77. So we have a trade to be executed we better rush. Okay, we better rush. So since the market condition is strong, I'm going to look at the 4-hour time frame to look at my target UFOs. So activate UFO. And oh yeah, like we're gonna be too happy. You can see at 91.3, okay, 91.3 is right here. Okay, 90 is where the target is. Okay, and the entry is right there. So we only have this little amount of room for a profit. And even though earlier we okay about reward to risk ratio, in this case, because it's a minor, okay, because it's a minor, and depending on the Forex broker that you use, you may get a little bit of a wider spread, and therefore I will pass on this trade. I will attempt to find a better one, because really in this case you may have a not too good profit, and on top of that some slippage. Okay, so not too happy about that. Okay, so I'll switch back to the Aussie Swiss franc. That one is below the average, so we will pass. Australian dollar, Japanese yen. That one is at the average as we speak, okay, but we have no green until lower, so we will pass. Australian dollar, Kiwi. So we have a close below the average. We have red, but price is slightly above the average, okay, and the red is coming much higher, so we're not gonna do this. Canadian dollar, Swiss franc. Okay, Canadian dollar, Swiss franc. That one is basically testing the average now, just below. Okay. You are in the S&P long, Bojan. Good job, my friend. Out of curiosity, Bojan, are you using the 60-minute time frame for this setup, or you're using the 15-minute time frame with the future? I believe probably that's what you're doing, but I would like to confirm that. Canadian dollar, Japanese yen below the average, and no green below. So we will pass on the trade. Swiss franc, Japanese yen. We are now testing the average. Could be a good time to enter, but unfortunately, no red, okay, at this price. So we will have to pass. Euro to there. So yeah, this is a trade that could have been taken a few candles ago, but this one not available anymore. Already happened. Canadian dollar. That's quite interesting how many setups are looking the same in the currency markets at the moment. So we have the average located at of the entry would be 18. So we are not going to be happy with that one, isn't it? Not going to be. And with the list, Euro Swiss franc. So we will pass on this one. Euro pound. Okay, we may have a trade now. Yes, have the prior close. Okay, is above the average. We are market environment. In a strong market environment, we want to identify UFOs in the next common time frame. The next common time frame is going to be, we will move to 4 hours and active, and this will set our target be located and see 0.9010. Okay, 0.9010 is the final target for the euro pound. Okay, now for us to be able to have a trade on the euro pound, okay, for us to have a trade on the euro pound, we need an entry lining up with the average, which is currently let me have the mouse in the right place. The average is currently pointing at 89.39, which happens to be that green UFO. Okay, so green UFO going all the way to 35, and 35 is here, but we also have this UFO too that goes down all the way to, let me put my mouse in there, all 30. Okay, so we're gonna have an entry at 39, but our exit will be 32. Okay, so 89, 32. Now, before I keep planning on this trade, since we have time, because we're gonna have a close in just a second. Okay, how the stop out took place, isn't it? Because that stop out actually was a change in market condition. So we're gonna be ready now to replan on trades in a few seconds. We're gonna have a new close, of course, the new with red DMI. So we had a complete full change of trend. Okay, complete full change of trend. What about the same with the S&P? We just had the close. So close is below. At nothing here. We also have this UFO. Okay, of each other. So this one would be a little neat entry. The NASDAQ is 740. 40. We're gonna have this UFO. Okay. So now the challenge. Okay, the challenge is that, and again, this is what the market is giving us. So the challenge is that those three UFOs are lining up. So we're gonna have to treat it as one with an entry below, okay, and a target, and a stop above. So in other words, all this room in the middle, that's gonna be risk. Okay, so the risk in the case of the NASDAQ is about 15 points. From 40 to 55 is around 15 points. 15 points times 20, that is $300 if I am not doing the math wrongly. Okay, so we have around $300 of risk on the NASDAQ. And if you look at the S&P and we were to plan this trade around 47, so again, this is going to be the one. If we focus on 51, so 51 is going to be in here. So then the stop would be here. And if we look at 51 is here, so then our stop would be 53. So basically on the S&P, we would have a stop would be located at 50, 20, and would be located, okay, entry would be located at, let's call it 48. Okay, so, sorry, 48. From 53 to 48, we are talking about 5 points and 5.25 points. So 5.25 points on the S&P, $50 a point is $262 of risk. 15 points times 20 on the NASDAQ, it's around $300 of risk. So it's about the same. Okay, it's about the same, but it does look that we have a little bit less risk with the S&P. So depending on your account size, you may want to look at the risk involved. And also, following up with the question that Juan Carlos was asking earlier, you can also look at deciding which market to trade based on where is the next UFO. So with the S&P, okay, with the S&P, it seems that the next green UFO will be located at 3675. So 3675, 293675 is the location for the next green UFO in the 15-minute time frame. Okay, that's what we have on the S&P. In the case of the NASDAQ, okay, let's do the same. Okay, so 60 minutes. And this, by the way, is something that I could have done a little sooner. But I was planning to trade with the euro pound. So anyway, so with the NASDAQ, in this case, is a little closer, isn't it? So 7711.5, 7711.5. So look, it seems that we have a little more room with the S&P, and we also have a little less risk with the S&P. So Juan Carlos, if you were to ask me, again, coming back to your prior question, even though you got the answer earlier, but now you can see it in a practical application. So the S&P would be a better bet. Okay, so I'm gonna go with 2 contracts. Okay, 2 contracts for the S&P. I am going to click on. I was going to enter at 48. Okay, I'll do 48 because the average will move up. So we'll do 48.25. So we'll do 48. Okay, so 48 is good enough. So I will plan on my short to be at 48. So click. Okay, here's the short. I will adjust my stop first. So the stop we said we're going to locate it at 53.25. So 53.25 is, as you can see, in the white space, in the white space, in the white space. Okay, so we are not having the stop located where the UFOs are. I'm gonna move my final target to 36.75. This is my final target, and then I will need to adjust my safety target. So 53.25 minus 48 is 525 minus 58. That is going to be 52.75. I think I made a mistake. So 48 minus 5.25, that's going to be 42.75. I don't know how I done the math, but I certainly made a little bit of a mistake here. So 42.75. Okay, 42.75. Here we go for that safety target. Okay, so we have entry, short, stop. We have the safety target, and then we have the final target. Okay, and this is the trade. We have the order in. Okay, so now we just need to wait for the market to come to us. Okay, so wait for the S&P to rally a little bit to find the average, and from there we have a probability for the S&P to fall. Okay, like it did here, for example. Okay, which is something that happens, often, as some of you have realized after using this methodology for a while. Okay, so anyway, so let me look at your questions. Okay, while I go back to before I go back to the Euro. Orlando, good job, my friend. I can see that by being more conservative with your entry, you ended up making your and that's well done, my friend. Good job. Yeah, I can see some of you got stopped out, so I understand as well, and this is part of trading. Orlando obviously has developed some experience with the methodology by trading it for a while now, and he probably came up with certain rules around the market open when there is more volatility, maybe being a little more conservative, because of course, if you have a better entry, then your 1-to-1 is closer, and if your 1-to-1 is closer, then you can exit faster. Okay, good one. Very good. Yeah, Bojan, I can see you are confirming you are using the Euro futures. Very good. So the time stop rule took you. So my friend, this is part of trading, isn't it? So good job by following the rules, Orlando. Yeah, I can see the screen is updating correctly at the moment. So again, you guys know it. I don't need to repeat myself. Little struggles with the internet here in China, guys. Okay, so really appreciate your patience. So anyway, so let's continue. Oh, you are back to the S&P. Very good. So let's continue with a plan for the trade on the Euro Pound, and hopefully we'll get filled on the S&P too. With the Euro Pound, let me see. We were planning on the long. We decided to use as an entry. You know what? I'm gonna write. So what we'll do for the Euro Pound, let's complete this trade. The final target for the Euro Pound, okay, so final target, okay, was set as 0.9010. That was the final target for the Euro Pound. We also said that as an, oh, sorry guys, I just clicked on the wrong place. Let me type this again. So final target is going to be 0.9010. Okay, so we will also have an entry. Okay, so long entry, okay, is going to be 0.8939. This is what we said. We also said the stop would be located at 0.8932. Okay, but you probably remember, okay, let me leave it like that for now, but you probably remember that we have a rule, okay, we have a rule for the stop where we are not going to use 32, okay, we are going to use a lower price for the stop, just like we are not going to use 39. We need to incorporate the spread into the calculation, so we will not use 39, we need to use something a little higher, right? So we'll calculate that in a minute, and then we will also calculate the safety target, which is going to be a 1-to-1 from that entry point that we need to calculate right here. Okay, so let's do that. Let me bring up the rules to refresh it on the screen. While I load the rules, let's see what's happening here. So still waiting to get filled. We are 4 it. So back to the euro pound and back to the rules. So here are the rules, and what we said about Forex is that for Forex, we will add 2 pips to all buy orders, and we will add 5 pips to all stops. That's what we said. Okay, so therefore, okay, back to here, setting, guys, when setting, okay, since it's a sell order, we will do nothing. It's going to be 90.10. The entry, okay, the long entry is 0.8939. I just said we're going to add 2, so that will make it 41. Okay, and for the stop, okay, which is 0.8, we need to subtract 5. Okay, we need to add 5, which in this case is subtract, meaning making the stop further away by 5. So that, okay, so if you do the math from 41, okay, you have 14 pips. So that means that our safety target would need to be 14 pips about 0.8941, which is going to be 55, if I am not mistaken. Okay, so this will be the plan for the trade with the euro pound, and if you wish, you can take a screenshot so you have the parameters, on your side, so you can place that order as the session concludes, which is going to be a few minutes from now. Okay, you can see the euro pound, started going down. So we have this beautiful red candle coming down. So hopefully it will reach our entry point at 89.41, which is more or less around the average, and then you will get filled. Okay, so you are basically 49 to 41. We are basically eight pips away from that particular entry. Okay, so this trade could happen fairly quickly. Okay. Got it. Perfect. I'm looking at your notes, guys. Okay, and it seems that it's all clear. Okay, so guys, to conclude the session, so I'm just gonna go back to the equity markets, see what's going on, see if there's any special instruction or anything said. Okay, and with the S&P, so everything looks the same. If the new close for the S&P will happen now in 1 minute time. So in 1 minute time, new close in this chart. Okay, the 15-minute time frame. So it's looking very clearly or very likely to close below the average with the red is the same. I'm curious to see something special. So with the NASDAQ, we got the same. Okay, we basically got the same. Close below the average, red DMI. The 39, draw this again, does fall in between this UFO. But at the same time, you gotta be careful. Back up, okay, when the NASDAQ goes, also go back up, okay, and 39 may become 40 or 41, and this is basically the extreme value already, so you would be in trouble based on this UFO, okay? Now, again, this UFO is overlapping with this UFO around 40, and therefore, again, you have the same situation we described before with the NASDAQ giving you a valid entry, but you will have around 15 points of risk. Okay, so again, it is still looking like the trade on the S&P looks better. Okay, if your account is large enough, you can certainly go with half of the position size on the S&P and take the same trade as well with the NASDAQ to have a little bit of diversification. In case the S&P is a little bit of a teaser, you have seen that before, isn't it? That sometimes, you know, you got the S&P, stops you out a bit of time, one candle or two above the arc, and then when actually welcome very much these wide structures with multiple UFO overlapping each other. Okay, so you do welcome it when that happens. It's not that common, but it could happen. Okay, and I'm sure if you have practiced the methodology, you have seen it happen. Okay, so guys, so again, new close. Notice that the average is still 47. So 47, 47, which in this case is going to be 48. As you know, is going to be still a valid entry. And we are basically 2 points away, 3 points away from the entry, 45 to 48. Okay, and really, I don't have any additional instructions to give you. Okay, but I will have a request though, which is that if you're gonna execute this trade, I would love it if later on you could send us an email and let us know how it went. Okay, how did you feel when executing the trade? When I say how it went, I don't only mean the profit or the loss that you collected, but also how did it go? Did you use time stops? Didn't you use time stops? How did you feel while the trade executed? You know, how did you feel when you saw some red kicking in? How did you feel when you saw some green kicking in? Did you got emotional? Did you manage your emotions? Did you stay disciplined? So please use us as a tool to keep yourself accountable by voluntarily committing now to sending us an email after this trade is concluded if you execute the trade. Okay, so that way you will kind of healthily force yourself to execute this trade the way you should, and hopefully we can help you to be more accountable and therefore more disciplined and therefore more mechanical and therefore more profitable. Okay, again, if you are not too comfortable with the trade or you are still practicing, please use paper money, and if you use real money, please calculate the right size for your account before you execute. Okay, but putting that on the side, it would be nice for us to see, and hopefully you also feel it's nice to you that we are willing to kind of keep you accountable, by you healthily committing or voluntarily committing to shoot an email to us if you're going to take this trade. Okay, again, you don't have to, but again, I often talk about teamwork when we are together in the get-together sessions. Okay, and when I say teamwork, I mean it. And by the way, that is how you learn how to trade. And once you know how to trade, that is how you get better. Okay, by still working in a team and never isolating yourself. Okay, so my proposal is there. You can choose to take it. You can choose to not to take it. Okay, but here's my proposal. It is not a request, even though I would love it if you were to feel or think about it as a request. So you commit to it, and therefore that would help you to be more accountable. Like if you hire a tennis coach, for example, right? So if your tennis coach gives you some advice when it comes to maybe the type of nutrition or something like that, maybe that would be a good idea to follow that advice and commit to it, isn't it? So that's my proposal to you, my friends. Orlando, love the diligence. Love the diligence. Your order is in, and you will share as requested. Thank you so much, and great example. Thank you so much as well, dear. Okay, and and love it to see again the teamwork. Okay, so anyway, guys, we'll conclude the session for today. Again, I am fully aware, 100% aware of some of the technical difficulties, but at the same time, I cannot change the physical location where I am, and I rather conduct a session, even if the sound is not perfect. But at least we keep working with consistency on developing your skill, instead of next thing you know, I disappear for a week or two just because I happen to be on trip. Okay, so I am committed to you guys, and putting on the side that is not ideal, that technology all rough here in China. I am still, you see it this way, and that's my intention. Okay, so talk to you soon, my friends. Yeah. So Geneva, you know what? If the risk is too much, okay, if the risk is too much, here's another proposal. You can use the micro E-mini contract. Okay, you can use the micro E-mini. Okay, so the micro E-mini, okay, the order, okay, instead of ESU19, you would simply add an M at the beginning. Okay, if you add an M at the beginning, okay, now you just got the micro E-mini contract, and this one is 10 times smaller. Same for the NASDAQ. If you do MNQU, so now is the micro E-mini is 10 times less. So this is going to be 2 points per dollar instead of 20 points per dollar. So now I believe, Geneva, that you could certainly do the practice. Okay, a paper money account if you never traded micro minis, so you can practice it there, but you could certainly practice these micro contracts. Okay, because liquidity being not as good as the NASDAQ, you can see that liquidity is not too bad. So you got 23.5, and then you got 24 on the bid and the ask. So it's 2 ticks. Okay, it's 2 ticks. I mean, on the NASDAQ or the S&P. Okay, notice how the liquidity, if I froze the screen, 21.75 to 22. So the liquidity is better. You have 1 tick of slippage, where with the micro minis is 2. Okay, but if your account size is limited, or you are in learning stages, and no matter your account size, you want to take it small, so please go ahead and use the micro minis, so you can still do the practice and work on developing your skill by practicing, instead of just watching it from the sidelines. Okay, so this is my suggestion, which hopefully makes sense. Okay, so Bojan, order is placed. Royce, I have 2 real accounts. One will show chart order, the other one will not. When I put, so what normally happens, and I'm not sure if this is your case, Royce, you will need to double check, but when you right click InterStation, you have access to format account orders and positions. This is per chart, so you could activate or deactivate, and then you could decide which account if you have multiple accounts. So maybe you have selected the wrong account, or maybe it's simply deactivated. Notice that if I click OK, the order lines disappear from the chart. So not sure if this is what is happening to you, but hopefully this gives you a little bit of a tip to go ahead and research more in depth what's happening in your TradeStation, to hopefully adjust it and have it the way you want. Okay. Yeah, if you Juan Carlos, very good question. If you're gonna use the micro E-minis, okay, not the E-minis, because the E-minis are the normal contracts. Okay, so if I understand that you refer to the micros. So the micro E-minis, okay, if you're gonna trade them, please do not chart them. Okay, chart the normal contract, the E-minis, but when it comes to placing the order, only to place the order, use the symbol with the M in front. So MESU19 would be the symbol. But when you chart it, okay, chart the full contract, because the UFOs on the micro minis, we don't know yet if they are reliable or not, in the sense that we don't have historical data enough, because it's a new product. Okay, so use the regular E-mini contract to pick those figures, okay, and based on the figures on the chart, place the order using the M symbol, MESU19. Okay, so hopefully this is well understood. Wonderful, my friends. Again, huge pleasure. It seems that there are no remaining questions. So I will now conclude the session. Again, huge pleasure. Thank you for being there. Thank you for being there. Thank you for being part of this amazing UFO community, guys. I have so much fun in these sessions, and beyond having fun, I'm so proud of seeing what you guys are doing and the growth. And this applies to some of you guys that you have been part of us of our community for a while, but also this applies for the new members that you guys are sharing with us. How is it going in those initial stages with UFOs? And I am delighted. It's really I mean, I cannot express it with words. It's really amazing to see how you guys are growing and how everything is coming together and how we all together end up speaking a very unique language, the language of the UFOs. Okay, and we are acting in the marketplace with such a mechanical approach. Okay, so I love it, love it, love it, guys. You guys take care, be disciplined, and you'll tell us more about how this trade went, or any other trade, or you know how to find us. You guys take care. Bye bye, everyone.